to this month's housing update for November 2024. My guest today is Randy Williams from TBF Mortgage. Randy, we're going to just jump into this because there are so many questions on people's minds. We've just come through the election. What's happening? Sales have been down. It's crazy all over the world, right? So, people want to know, when will mortgage rates come down? What will it take for them to come down? Am I going to be able to find a home if I want to be able to move? Is it going to go back to those days, right? Will the housing market pick up next year? Is the market going to crash? And last but not least, what's happening in Southwest Florida? So let's jump in. Randy, so the question is, when will mortgage rates come down? What did our friend Ralph McLaughlin have to say?
Sure. The trajectory of rates coming over the coming months will largely be dependent on three key factors: the performance of the labor market, of course, the outcome of the presidential election, which we already know, and any possible reemergence of inflationary pressure. While volatility has been the theme of mortgage rates over the past several months, we expect stability to reemerge towards the end of November into December.
Which is kind of where we are right now. We're second week into November as we record this. This is only going to get to have more insight as we go forward. But, the jobs came out in October from the Bureau of Labor Statistics, and they don't look strong. They don't look weak. They're exactly on the weakening side to help this out, right?
Yeah, that's what's going to happen every time you're heading into an election, especially one like this, that everybody was sort of on pins and needles.
Right.
I see that and I think, yeah, of course, that's what we're going to see.
Yeah, which is great. I mean, that's really great for inflation.
Right.
Is a low jobs problem with jobs. That's sad to say.
Correct.
That is so wrong on every level.
Right.
But, inflation still isn't at the Fed's target, right? We're still high.
Yeah. And there's so much pressure to lower rates. And that's what they're looking at. They want that number at 2 before we really start to see that bigger drop that we all expect, that we're all waiting for.
Right. But they did just lower last week.
Correct.
By how much?
25 basis points after the 50 the month before.
Okay.
So we're going in the right direction.
We're in the right direction. But has that really affected mortgage rates yet, or was it everything else?
Oddly enough, after the presidential election was decided, the stock market obviously shot through the roof.
Right.
If you were in the stock market, woo! Interest rates went up too.
What?
And you're like, wait a minute. And it's very temporary.
Yeah.
And there's a few things that maybe we'll talk about why that happened.
Okay.
And then, what the future holds.
Well, one of the things I do love, Randy, is this slide. And this is one thing I can bet on that we've had for a few weeks, which is what's happening in 25?
I feel like we've been doing this for a year. I genuinely feel like we've been doing this for a year, but it's coming. Like the Fed rates have finally been cut and that pattern has established itself. Yeah. We have been talking about a full percentage comeback in 25 for over a year.
Right.
And everything is lined up for that to happen. Everything looks good.
I love that. So the next question is, what will it take for prices to come down? Well, I've had people say to me, the sky is falling for a while. What goes up has to come down. The whole market is going to get shattered. Randy, I just don't see the data on that, and so nor do the analysts. So if we look at new construction, we definitely overbuilt in 2003, 4, 5, 6, et cetera. But then we just plummeted. And now we're trying to just get back up to the numbers that we need to get to on a 50-year average for increased population. So that's new builds, right? And then you look at the resale side of this, and where the prices that the analysts are coming to and saying, we'll see from the top 10, Goldman Sachs all the way to Moody's Analytics, we're going to next year have about a 2.5% increase. That's not minus 10. It's not minus 12. It's not minus 100. We are going to see a small, moderate increase.
And the first time you see interest rates really pull back, that one bump that we're all looking for, I bet you all of that shoots up even more.
I bet it does too. So, the other thing is people are still remembering when they couldn't find the house that they wanted, right? So can I find a house to move? Well, this is a national chart that shows inventory, homes that are available coming on the market. And you can see that I think it goes back all the way to 17. It is coming back up. Now, it's not at 17 levels, but this is nationally, right? I'm going to show you what's in Southwest Florida. And what does Ralph McLaughlin say to all of this?
There were 29.2% more homes actively for sale on a typical day in October compared with the same time in 2023, marking the 12th consecutive month of annual inventory growth and the highest count since December 19.
Yeah.
Again, we had a lot of room to make up.
Yeah. Right. But October in Southwest Florida and the four main, not the entire MLS, but the four main markets we sell in was up. It was up a couple of thousand homes.
During hurricane month.
Yeah. Right.
Exactly.
And the sales were down significantly.
Right.
During a hurricane month.
Well, we had a couple scares.
Right.
We got away pretty good.
Right.
Let's be honest.
So, that's typical. So
Right.
I'm anxious to see, and I've got some stats on election years, and we can talk about that in Southwest Florida.
Mm-hmm.
But, the question is, will the housing market pick up next year? And I submit, based on what happened in 19, what they're projecting, the end of 24, and in 25, that we're still going to be less than what happened in 19, 20, and 21. But we're certainly getting closer to 22 and at 5.2 million homes nationwide. And that's more than we did in 23.
Yeah, I think everything gets pinched in an election year. I think you add in higher interest rates that we've seen in 20 years. That shows that number. I think most economists, I think most realtors that have been doing this for a while, think we're going to have a nice 2-3 year run of very positive growth for everybody.
Yeah. And when we say growth, that means if you own your home and you're staying there, you're going to see some nice increases in prices. If you're looking to buy, you don't have to worry about the market crashing. It's going to continue to grow. So that investment will be a good investment versus maybe the stock market where it's a little more risky.
The demand is always going to be there.
Right.
Period.
So I want to answer this is the market going to crash? Because I've heard this. I mean, we talked about this a lot in the spring because everybody was saying, Chicken Little, the sky is falling, the market's going to crash. Well, one of the things I love about this slide is it kind of breaks down the debt balance in trillions for mortgage, HELOC, auto, credit, student loan, et cetera. And you might think 13.2 trillion in mortgage debt is a lot, right? But when you look at this, Randy, and this kind of complements this, we have 13.2 debt in mortgage debt, but we have $35.1 trillion in equity. That is just amazing to me. And if you look back at this lower green area over here and back in 6, 7, 8, 9, we were actually underneath. We had more debt than we had equity. And if I blow that out in another slide here, and I look at this during the housing crisis, right? Total housing market value was 17.9 trillion, but the debt was 9.7 and the equity was 8.2.
So read between the lines, right? If you were fortunate enough to buy back in 2012 or right after that, and you own all the way up until now, you're probably sitting in a pretty sweet equity position.
Absolutely.
So what I see here is a lot of people with a ton of equity. I see interest rates coming back. I see the trajectory of, like you said, of sales this year. I just don't buy into the housing crashing. Like how? What indicator is there out there,
right,
that the market is going to crash? Like what? Name one.
I can't think of one.
Right. So like that question. Just,
Well, but it is a question,
Sure.
and for people we have to
Sure.
give them understanding of why. Because my heart, it feels like what goes up must come down, right? It's going to happen, but not necessarily. So let's talk a little bit about Southwest Florida. People ask me all the time. I go in to talk to them about selling their home or they're looking to invest here. They're like, tell me about the market. Well, the first thing I say is we're in a balanced market. Right now, towards the height of it, we're at 6.98 months in all of our market of months of product, right? That's a very neutral market. It's not a buyer's market. It's not a seller's market. Love that. Now, the second thing I talk about is days on market. Because although this slide is kind of goofy because Marco went from like 115 or 10 days on market down to 67. Not sure why that data is the way it is. But we're somewhere between, 50, 60 days on market up to say 120. So we're not selling them in 10 seconds, which means that's great for the buyers who can't make a decision that quickly, which we got a lot. 78% of people, Brandy, in COVID are dissatisfied with their purchase.
If I'm in Marco Island right now and I was even remotely thinking of selling here, like, sometime soon.
Right.
And I see the days on market go down from 110 to like just shooting down to
67.
like 60. Raising my hand, calling my realtor right now.
Yeah, you can call us. Homes for sale in Southwest Florida. So this is entire MLS, and you can see this goes back to 15, where we had data, and we had roughly 20,000-ish homes for sale, a little over, in at the beginning of 19, and that shot down, and we're somewhere around, 16, 17,000. We have inventory. When you look back at 21, 22, and as we moved into 23, we were below 5,000. That is
scary.
Scary. Right. Not enough inventory out there. And last but not least that I want to really talk about is the election. Now, we just talked about this. We just came out of 24 into 25. All the analysts say the prices will go up. We'll have more inventory. We're seeing that nationwide. That's all good. Well, here's our local market where I pulled the data, and I pulled it back to the first election that we have data on, which is 12-13. Then it was 16 to 17. Well, we had a little storm in 17 called Irma, and that really whacked some of our market. And then, 20 and 21 kind of don't count either because they were COVID, so the market went crazy in 21. But if we go back to 12-13 in all four of these markets, you'll see that anywhere from 10 to 20% increase in prices. That is significant.
Yeah, I think everything that we've looked at for the last 18 months has said that the prices are going to continue to go up. And if that happens, hopefully a little bit of relief, lower mortgage rates, that money becomes a little bit more affordable.
Right.
And that's kind of how that balances out.
Yeah, absolutely. So again, I'm Mary Bartos with the Bartos Group, and
Randy Williams with TBF Mortgage.
We don't know if it's your time to move or not, whether you're buying or it's time to cash out on some equity. But whatever that is, we look forward to helping you. If it's just getting you an equity report where there's a stake in the ground, we can do that. If it's, hey, I'm kind of thinking about buying there, I'd like to know more, we can help you with that as well. And of course, Randy can give you a mortgage. So until next time, we look forward to seeing you here in Southwest Florida, loving our lifestyle.